What's up, everybody? Today in this video we are going to be breaking down the most important aspect to day trading, or more importantly the most important aspect to life: stimulus and response. Right? So the world is governed by principles, biblical principles, universal principles. These are universal truths that govern the foundation for how the world operates. Right? And whether you're talking about the world, whether you're talking about nature, whether you're talking about physics, the stars, or the stock market, there are fundamental truths that govern how things move, how things operate, right? This is how we are able to start to predict or start to assume specific outcomes, right? So I was a data analysis, right, for a telecommunications company where I worked in the radio frequency industry. I used to measure RF signals day in and day out, accumulate data, and start to understand certain patterns, right, that you'll see in certain and specific frequencies, right? So I have a really healthy background in this topic. And when I started to day trade, I started to see a lot of similarities, and it really helps you understand how no matter where you are in life, there's just certain truths and principles that govern how things move, right? And they give us a better understanding of how things operate. And the more understanding, the more knowledge, the more clarity you have, the better and easier it is for you to effectively develop strategies and make very good, rational, logical decisions, right? So today in this video, we are going to be breaking down a trade that we took, but more importantly, I want to break down my approach. I want to break down the importance of having an approach. I want to break down stimulus, and I want to break down response, right? So what is stimulus? What is response? And guys, I'm coming out with a new course that's going to be based off principles. It's going to be based off systems, right? Because once again, principles helped me develop systems that actually work. And my goal is to gift wrap you guys this so that you guys can make better, more logical, more rational decisions in the market that are going to help you obtain your goals, your dreams, right? Get that specific outcome, that specific response that you've always been looking for, right? So what is stimulus and response, right? So I like a really simple way to break it down is you punching a hole in the wall, right? Think about it. The hole in the wall is the response. You is the stimulus. Your hand, your arm moving with force, that's the stimulus. You are projecting your hand with force towards the wall. That's the input, right? And this all comes back to Newton's third law. For every action, there's an equal and opposite reaction, right? So you pushing your arm towards the wall, that's the input. That's the stimulus or stimuli. The response is the result, right? This is the hole that's left in the wall considering you punched it with enough strength, with enough force, right? So that is stimulus, that is response. Input, output. So basically, an easy way to remember it is stimulus is any repeatable approach that you can specifically direct towards a scenario, right? So for day trading, our stimulus would be our strategy, our systematic, repeatable approach that we use to govern opportunity in the stock market, right? That's our strategy. And we're going to break down what that strategy is that helped me obtain this 143% return on Friday, right? Very simple trade, nothing crazy. On SPX, I'm going to show you how we did that, right? But that is our stimulus, right? The response is going to be your win ratio, right? Your profitability, right? That's our goal, our result, our output, right? So right now you have an output, whether you like it or not, are happy, are satisfied with it, you are getting some sort of result. You have to ask yourself, if you changed your input, if you actually monitored and modified your input, your stimulus, would you get a different response, right? And a lot of people will be like, oh, Josh, I don't believe in all that stuff. I don't care about physics. I just want to make money. Well, if you truly wanted to make money, you would understand this concept because you may not have a system. You may not be defining a repeatable approach right now. And therefore, that's probably why you have inconsistent results, right? Just because you don't believe in it or understand it doesn't mean it's not still happening. It's much like a fish that's constantly in water swimming, right? Is he aware that he's even in water, right? does his awareness change the fact that he's actually swimming in water? Absolutely not. He's in water, right? So once again, just because you don't believe or understand in something doesn't mean it's not taking place, right? And once again, the reason why I'm so big on this concept is I used to, like I said, study radio frequency, right? I used to measure this stuff. And when you measure it, you learn you have to input a stimulus, right? This is either PIM or some sort of return loss that you use with a signal generator and analyzer, right? You input PIM into a system or a pathway, and then you measure its interference, right? So once again, understanding these principles helped me become a better trader. Very simple, just because it gave me the awareness, the understanding, and the importance of having a systematic approach. Right? So that's the whole backstory behind it. We are going to go much deeper in the course on these concepts, on these principles. I don't want to take tons of time on it today, but you'll see over here in the Discord. And guys, don't worry, no one has access to this yet because it's not finished. But once it is, it will be coming directly to premium members first that are on our team. If you want to get involved on our team, you click the links below, take you to my website, you subscribe for data. If you want the data reports that I send out monthly, go opt into that. But if you actually want to join our team, click the links below and you can become a high performance trader through a monthly payment or one-time purchase of Trader Boot Camp. That deal will only keep going. It will end on July 1st. Today is December 29th, so you literally have 2 days to take advantage of the Trader Boot Camp promo. That will end in 2 days. All right, so let's break into the lesson. So once again, the day we're going to be talking about is 12/27/24, right? Now, very simple day. My daughter's off from school this week for winter break. I was in the bank and I was still able to identify this opportunity using our strategy, using our stimulus, and get a phenomenal result, right? And once again, with trading, you have to realize something. It's all probability, right? There's nothing guaranteed and there is nothing that is promised. Therefore, you have to go into every single trade with an understanding of your strategy's win ratio based off your data collection, right? You can use mine, but if you truly want that confidence in your strategy, I highly advise that you collect data on it and review it. It's very simple. It's very simple. Log your trades or just backtest them, right? Go through, develop a repeatable approach. That's what we did. That's what has given me this strategy that we're about to break down, right? That currently has a 82% win ratio for the last 3 months. And this gives us our confidence to enter into trades. And once again, we need to understand nothing's promised. Therefore, my goal isn't to have a green day. My goal is to have a green month, a green year. And to do that, is to understand how consistency works. You must understand the importance of having a repeatable approach. Because if you are compromising your input, you are also compromising your output. Hope that makes sense. All right, so let's dive into the 1 hour here and we'll do a quick pre-market plan. So the way I was coming into this day, right? So let me just get rid of some of these lines because it's kind of all over the place here. Okay. So let me do this. All right, so over here you're going to see we have a market, right? And this market is trending up. We have this heavy supply zone up here. We'll just come over here and we'll draw a little zone, right? This is an area where we're looking to play longs into, considering buyers hold the open, right? So the law of the 50-50 perspective, right? So I'll give you guys a little sneak peek of what we're doing over here with the new course, right? So over here in the Discord, you're going to see trading principles, right? And this is one of them. It's the 50-50 perspective, right? Once again, this is a fundamental truth that governs how things operate, right? It's an understanding, it's an awareness, right? And it's very simple. And basically what it tells us is whoever can control the market open has an 88% chance of controlling price up into the next market imbalance, right? It's very simple. And this concept applies to all pint numbers. But once again, with understanding, with statistical reliability, I've come to the conclusion that whomever can control the market open has a 50-50% chance of controlling price until the next market imbalance. Does this mean it's going to move immediately in your favor? No. Does this mean it's going to happen all the time? No. What does this mean? This means that I have a higher probability, a higher chance of one thing happening over another when I identify the correct stimulus, the correct input, right? When I identify the correct input, I get an correct output, right? There's an 88% chance with this input, I will get this output. That's how you must approach every decision you make in the market, right? So that's a little sneak peek of the 50-50 perspective. So the way I'm doing this is I'm looking at price action. I'm going, okay, we got previous day low. We got a market imbalance from previous day low down to 569. This is our first market imbalance, right? Then we have a market imbalance above PDL up to end of day, right? Closing the gap. So the way I'm looking at this is we're falling below the 50 EMA. That's bearish. And we have this massive level of support right here where whomever can control that open, say it's sellers, there's a very high chance we're going to get a push down into this level of support. Why? Because the market moves via break and retest, via market structure. Therefore, if sellers hold the open, this level is extremely probable. This is where a lot of volume is, right? So once again, the 50-50 perspective. So now we drop into the 5-minute time frame and the market opens. And you can see, don't just go, oh, look, the market's opening. Ask yourself, how is it opening, right? The cloud is red, right? This is once again, I use very simple indications and tools. Therefore, I don't need to think a lot. Yes, this game can be complex. It will be as complex as you make it. Therefore, learn to approach it in a very systematic yet simple and effective way, right? I don't want to be using tons of mental fortitude on tons of indicators. I literally want to go, all right, what color is that cloud? It's red. All right, I'm short until otherwise, right? Very simple. Open print is established right here. And so now that open print is established, for me to determine who is in control of it, I must allow the market to create structure off of it, right? The market communicates to us, but it doesn't communicate to us like humans do. It's a stock market. It communicates to us through market structure. It communicates to us through our tools, our moving averages. And more importantly, it gives us great opportunity when we combined our strategy, which is identify your critical level, which is the market open. Number 2, identify the market structure, a moving average cross. Therefore, you can identify the shift in market conditions. And then number 3, identify the RBI or GBI entry criteria, right? So number 1, we've identified open print. We have our first target down here at 59576 and our next target down here at 59478, right? So sellers have come into the market, buyers have pushed price right back into the open. Notice here, we cannot close above the open. Is that bullish or bearish? It's bearish. That's not bullish, right? If you can't close above a level, that's telling you that sellers are controlling the level, right? So now I need to identify an entry. This is when I drop into the 2-minute and I go, okay, if I can spot a green bar here that gets ignored, I will enter the market short. I need the green bar ignored. I need the GBI. Why? Because I have to identify my risk. The number 1 rule in becoming a good trader is managing your capital. God will bless those that manage well, right? He gives more to the one that manages the little properly. Until you can manage your money properly, you will never make great moves. You will never make better, until you can manage the small, you will never manage the big. It's a very simple fundamental truth in life. Think about it. Any skateboarders out there, until you can kickflip flat ground, you will never kickflip a 20 stair. Very simple. You need to build the confidence. You need to build the competence, and you need to build the conviction to actually be able to execute, right? So once again, I cannot enter a trade. It's not even a trade until I determine my risk. It's gambling until you determine risk. The risk is what makes it a game of strategy. If there was no way to determine risk, there would be no strategy in this game, right? Risk is your superpower. Don't look at it as a negative. It is a positive, right? So once again, I need to identify a green bar that gets ignored by sellers. There it is, right? Price rips into open print. We start to get selling, and then we get that beautiful green bar, ignored, rejects the cloud. My stop goes directly above it, right? Like right here. And now I'm in the market short, targeting downside targets. You can see here, we got this glorious sell-off so that we can capture here, what was it? A phenomenal play. What is it? Daily recap of 143% ROI, right? So if you guys could take anything from this video, let it be your current results are a byproduct of your system. Your system is a byproduct of your principles, of your beliefs, right? If you're not identifying risk, it's because you don't believe in it, right? If you're not executing when you see your strategy, it's because you don't believe in it, right? So once again, it starts with your knowledge, your understanding of the concepts and principles. Then that goes into your strategy, into your input, into your stimulus. And then your stimulus will then create your result or your response. I hope you guys enjoyed this lesson and got tons of value from it. Join my team, click the links below, get affiliated with the High Performance Trader. We're coming into 2025 with the proper skill set, with the proper mindset, and with the proper habits. I love you guys. I'll see you in the next lesson.